What's up, guys? In this video, I want to talk about something I touched on a past live stream and something that I don't see talked about too much here on crypto YouTube, and that is allocations, specifically proof of stake cryptos, the teams, the admins, you as the retail investor, because I know there's a lot of people who invest into crypto and they do their research, but they don't check all the boxes. They check the crypto, the price action, and usually just the market cap and utility, and that's it. There's a lot that goes on behind the scenes when you do your research to really evaluate whether you think that crypto is bullish or bearish. Now, keep in mind, none of us have a crystal ball. At any time, a crypto you're bullish on can always turn bearish at the sight of real bad news, not just FUD. And FUD is fear, uncertainty, and doubt, by the way. But there's some things you have to be aware of as an investor. So proof of stake and proof of work are consensus mechanisms for cryptos, and they're very different. You're going to see an ongoing battle with proof of work and proof of stake, one being better, one being more adopted, one being more useful. So let's first rewind it back. Crypto was created to be different than the stock market, okay? Stocks are securities. Crypto are not meant to be securities, although someone can make the argument and say X, Y, and Z crypto is a security, okay? The SEC has been trying to do that. They recently lost their battle with XRP with that, but for the most part, crypto is meant to be a commodity. It's meant to not be a security, a different asset class than stocks. But that being said, not every crypto is created equal. We have different cryptos. We got coins, we have tokens, we got proof of work, which means decentralized. You have to mine those cryptos to put it in circulation, which involves using a computer and mathematical equations, very complex to put it in circulation. Proof of work by nature is more decentralized, more secure, oftentimes doesn't have a team, but some of them do have a team, which in Ethereum's case, before it went to proof of stake, they did have a team while they're proof of work. Proof of stake does not involve mining. It's usually more energy conservative, meaning they can be scalable without impacting the environment as much to what a lot of people would say proof of work does. They're more faster in speed usually, but they lack decentralization. They're usually more centralized than proof of work. So when you evaluate these two consensus mechanisms, you can see pros and cons of each. You can have someone who's a proof of work maxi, proof of stake maxi, and they'll argue to the death. But there's something that proof of stake cryptos have that the majority of proof of work cryptos don't have. I say the majority because 1% of proof of work cryptos do have this, and that is an allocation, an ICO. The team or private investors or venture capitalists, VCs, holding a part of the supply of that coin or token for free, or at the very least pennies on the dollar. This is an issue because if you're just a retail investor like me who doesn't have a ton of money to invest, we don't have inside knowledge as to what's going on. We're not on the team, we're not best friends with them, and so we usually find things out from the news, from Twitter, from after it's already happened. So already we're at a disadvantage as a retail investor versus a whale. When you have a lot of money, you have a lot of power, a lot of influence, and oftentimes a lot of connections. You ever hear this saying, it's not what you know, it's who you know? I hate that because it's so true, especially with politics and even jobs. Like, think of any job in the workforce. They usually require connections for the most part. You can have a resume that looks great and someone next to you's got a good resume as well, but they're connected to the boss. Maybe they're a relative or they're dating their relative or whatever, and they get hired because of that connection of who they know versus you. So this matters a lot in this market, right? That's why manipulation is so heavy. That's why you see a fear and greed index, because a lot of this market is literally fish eat fish. You're trying to buy before this group buys, and you're trying to sell before this group sells. That's how wealth transfers take place. One group does this, the other group does this. Someone loses, someone wins. It's part of investing. It has to happen. There's not going to be just hundreds and hundreds of millionaires and billionaires. There's going to be someone who makes a killing, a ton of dough, and there's going to be someone who gets absolutely wrecked. Hence why I always tell you guys, fish eat, fish market. But that being said, proof of stake cryptos oftentimes have allocations, which is why many of your crypto companies, which is what proof of stake cryptos are, they're often called labs, a foundation, because they have employees. They have a CEO, a founder, sometimes a CFO, a marketing officer, developers, all these employees that you would see in a stocks company like Apple or Amazon, right? Proof of work cryptos often just have the founder, developers, and that is it. So there's a draw to proof of work that proof of stake doesn't have. But then you have the people who say, oh, proof of work is slow, it's energy intensive, impacts the environment, it's outdated, whatever, okay? But the draw to proof of work is oftentimes when they don't have an ICO, is there what's called fairly launched, which is why I'm so bullish on Caspa. There's no VCs, no private investors, there's no team holding a allocated supply. Why is this so important? Because it gives us, the retail investors, one, a bigger chance to gobble up the supply, essentially a more decentralized marketplace. And two, the risk of being dumped on is a lot less because we're the ones holding it. And if you want an example, check the charts today, guys. Even Bitcoin is down today, right? Ethereum's down, everything is down. Caspa is literally around 5 cents, which is significant because it's around the all-time high. Usually, proof of stake cryptos never consolidate at their all-time highs. They always have a severe dip because the team eventually takes profits. It doesn't mean they're bad people, though. They're allowed to do it. Again, they're a company. It's no different than like the CEO or team of Apple or Amazon or Google taking profits for them. They usually have to do it to pay off employees, to pay for marketing, to pay for exchange listings, to pay for funding, to pay for growth in their ecosystem. Like, for example, if they're a blockchain game and they're coming out with games, or they're in the entertainment space, they're coming out with collabs from A-list celebrities or TV shows. None of this is for free. And so the companies, the teams of these proof of stake companies usually sell to fund themselves or the company. So this is not bad, doesn't mean they're scammers, doesn't mean they're evil. It just means you as a retail investor have to expect this, because what you're going to see without all this taking place is just this. The price of these cryptos dipping. Okay? It doesn't mean they're scams. It doesn't mean you got rug pulled. Sometimes it does happen where you get rug pulled. This often happens from not doxed teams, which in other words, anonymous teams. You don't know who the founder is. Those, aside from meme coins, which meme coins also get rugged, but aside from meme coins, are the ones you gotta be very careful about. Which is why I always say, by the way, you should be researching who the teams are. What's their resume like? Are they constantly hopping from project to project? Like, for example, the team for Tenant, which was recently on Kadena and is now on Akash Network. They literally create their crypto company, they take profits and dump on you, and then they migrate or they switch over to a new crypto and leave altogether. Very scummy, very shady, but it happens, right? So yeah, you have to be aware of what's going on with these allocations. It doesn't mean the crypto is bad. I hold some cryptos who have allocations. It just means you have to set your entry point accordingly and your exit point accordingly. You can't be greedy. A good example of this is XRP. The majority of XRP investors, unfortunately, think it's going to $100, $1,000 this bull cycle. Whether it's from the team telling them that, or they're seeing all these like weird cult members saying that, they're the ones who'll be left holding the bag, because the team, remember, is holding XRP pennies on the dollar for free oftentimes. And so if they want to make millions of dollars, they don't have to wait for this 1000x or 100x. A 2, 3, 5x, a 10x to them is a multi-million-dollar profit for them. So they'll dump, which is what you see with these cryptos. They go up like this and they dump. You don't see this for Caspa, despite what the naysayers are saying. I can't tell you guys how much hate I get for Caspa, that what are you doing? It's going to dip down to 2 cents, a penny. And they're comparing the charts of these proof of stake allocated cryptos to a proof of work fairly launched crypto, and they're saying it has to follow the same path. And this is why I say their lack of research, and maybe it's emotions playing a big part of this too, is literally stopping them from looking at a once in a lifetime opportunity crypto, in my opinion, because of what they've been seeing in the past for other cryptos. You can compare proof of work and proof of stake when you're evaluating which one to get into. It doesn't mean just because this happens for this one that this has to happen for this one. You have to do your research, which is why I say don't be holding 100 crypto, because sometimes you can see a migration, like which in Ethereum's case, which I'm still bullish on, but when they went from proof of work to proof of stake, a lot of miners had to leave. They left for something else. I think it was Ethereum Classic. Some left for Casper, whatever. Sometimes these teams make moves that you don't agree with. Hence why I have deal breakers for migrations. I don't like migrations. And so allocations to the team doesn't mean you got to leave if they have it. It just means if they're holding 99% of the supply, for example, and the retail can only gobble up 1%, as a small fish retail investor, you're already at a huge disadvantage. And if the chart looks especially bad because of this, this is where you can get wrecked. Okay, but again, I hold some allocated cryptos. It just means you got to be more conservative with your price predictions and get out before the masses do. Great example, H-bar. Everybody's saying H-bar is going to $1, $2 this bull cycle. If I see that as a retail investor, I know the whales and smart money are waiting for these prices to potentially hit so they can dump before you, I'll probably look to get out 50 cents, 75 cents, or at least take my initial investment out at that point so my risk is minimized. Okay, so this is what you have to be aware of as an investor. Like I said, you can't just research the utility, the niche it's in, the narrative. You got to also look at the team, what their resume is like. Are they going to stick around? The competition obviously plays a factor, tokenomics, the allocation, the inflation. Is the marketplace centralized, meaning are the team holding most of the supply still, or is it out in circulation for us to essentially buy it? Because once retail buys the supply, even if we're paper hands, it's more decentralized. It's more fair because retail is not going to gobble up millions of supplies. We're not going to change the tides of the crypto too much. I know this video is kind of all over the place, but yes, I really wanted to talk about coin allocations, ICOs, because every single day you see a new proof of stake crypto come out and they oftentimes have an ICO. It doesn't mean they're scams, doesn't mean they're bad. It just means you as the investor have a little more of an uphill battle and you have to be aware of when to get in and when to get out, as well as be honest and more importantly, realistic with your price predictions for these cryptos. By the way, if you want to reach out to me, talk to me, see your crypto and buying, selling, trading, run your portfolio by me, it is a limited tier benefit that I won't keep much longer due to high demand. It's a lot of work, but for the time being, I am doing it. Or you just want to talk to me, be a part of a support group of both beginner and advanced investors, then feel free to join my Patreon and Discord. I'll leave a link in the pinned comments down below. But anyways, now I want to hear from you. How do you feel about proof of work and proof of stake crypto? And what is your top proof of work and top proof of stake crypto in your portfolio right now? Drop your comments down below and let me know. If you enjoyed this video, please leave a like. Really helps so much. That being said, I hope you have a great day and I'll see you in the next video.